Greetings, market rebels. Welcome to this week's macro measure video combined with the sector situation video. It is Friday, September 5th, 2025. I'm Wayne. We're going to get right into it. Here is our trusty Market Rebellion disclaimer. Here is our trusty Market Rebellion intellectual property rights notice. And then here is last week's slide right there. I'm going to leave that up. Let me touch on just a very few things, try to get this moving along. So I guess that we got a little bit of follow through. It seemed like the market went a little risk off into last weekend, which was the long holiday weekend. We were a little worried that maybe that was holiday influence. Maybe it was. Don't know for sure. Anyway, thought the market could use a pullback. Got a little bit more of one there on Monday. We talked about that the SMH and NVDA could turn into a gut check situation. That started and then it was reversed, which we'll talk about. Talked about the holiday behavior. Talked about the odds last week, and we did get a little diciness this week. And that's about it. The Sneaky Bastages is a remnant from last week. And this week, and I say this week, we've got basically engineered but effective as our new sort of title headline. We've got a couple of highlights. Some are kind of in that orangey gold, and others are in sort of a pink, purple, whatever that is. Anyway, going to talk about very few things, hardly any tabs, maybe just one. But really talking about the double whammy. First of all, I think it's still very interesting. I think you should be at 2x on your playback speed. The double whammy to me is the false breakdown followed by the false breakout, which we'll talk about. I want to talk about the AAII. I think that's really maybe one of the factors that's helping what we saw this week happen. I would say that things still look really good. But there are still a lot of risks percolating below the surface. I think that this SMH NVIDIA situation may still exacerbate, and if it does, I just wonder how long they can act as if that's not an issue and kind of go into the rotation surgery and move all these other things up dramatically, like they did with Avgo, like they did with Google, like they did with Apple earlier in the week. So we still are at this type of a juncture with IWM. I still like IWM and XAU for the long haul in terms of keeping your eye on them as possible really good long side trader candidates, as long as, well, XAU stays strong and IWM continues to try to want to work higher, which it does seem like it wants to still. It just has yet to break out. We're still probably 4 or 5% away from that becoming more real, right? And well, the potential to become more real if it can hold above 245. But yeah, I mean, we've got interesting things happening where precious metals are really up strongly. Stocks made a new all-time high, and bonds have moved up as well, right? So everything's moving up, and very interesting, right? Because bonds and precious metals are often seen as safer spaces, hedges, but stocks don't seem to mind. And I really can't say exactly what is driving the precious metals and bonds up. Really can't say completely or totally, right, with great confidence. There's so many factors out there. But the point is that breadth and sectors, I don't think look too bad at all. And bonds, really, the yield is dropping, right? So they're buying bonds. Bottom line is, I think we left this the same. The AAII may reflect the reasons for this week's deft engineering that they were able to pull off. But we'd have to note that where are we two? That was where are we one. Where are we two? Is that we're at an advanced rally stage because, well, we have been rallying for some time. There's a lot of realistic, real good catalysts that are beyond, like we've passed, except for maybe the upcoming Apple thing that used to be a big deal. Maybe it will be again. Never underestimate what they can do. This week proved that again, given the kind of crazy moves we've seen out of a few names. But look, the last two all-time highs have really not been buys, where they just kept powering. So it's very interesting that there's no follow through, right, from the new high buying crowd, or there's almost like a lack of enthusiasm, which isn't good for the kind of momentum trading we want to see. But it's also not good probably for bears because it doesn't get crazy too crazy before we get pullbacks, and that just lets things sort of chill out and then find support again, and they just keep going. But probably right when something emerges, this won't work. When that is, though, is anyone's guess. And we're still sub mid channel on the SPY, which we'll talk about. Here's the bottom line game plan. The trends are still up and support has still held. So we have to acknowledge that, and we say it almost every week, but it's just been unimpressive at times where you expect to see this really strong finish, and all you do is get sort of this end the week with a whimper compared to where it was. They did have a squeeze going that was pretty strong yesterday when people realized, I guess, that they weren't coming straight back down again after what they pulled off on Wednesday, which I'll talk about, I think. And then these are just basically repeats with just a little bit of emphasis here, because I just feel as though there's some stuff out there. It's just not really front page. It's not impacting yet. There's a lot of things that could impact, and they're probably better left for another day. But there's a lot out there. So I think the odds do favor things getting a little more dicey between now and the end of October, when that really affects things. Well, I should say if it really affects things, and then when, to what degree. Of course, that's tough to say. So we shall see. But on that note, I'm going to stop the share. We'll start looking at the charts. We'll get right into them. And that's not needed anymore. Shut that down. And let's start out with, so I want to start out with a couple things and then go over to, let me pull this over first before I do that, though, so it's not in our way. That ought to do that. And then let's get share on screen 3. And there we have it. So there it is. Yeah, so I brought this up, and we haven't looked at these in a while, because we haven't needed to, right? I try not to keep all these indicators running at all times in terms of what we show, because it just gets really, really distracting, especially to folks that are new. It gets really busy. Who knows what size screen someone's looking at all this on. But I wanted to bring this up because this is my dot plot, which is obviously a lot different than the Fed's dot plot. But you could see these dots reflect how stretched from a simple moving average, in other words, a widely followed moving average, a particular name may be at a given time. So I like to look at this and say, well, how stretched, have they made it? And this is how stretched they've made it in Google. They're saying, right, that if you look over to the right, you can see where we are, right? We're really up there in terms of the percentile. And we're really at 99 and change on stretch from the 20-day. In other words, like, there's rarely are you this stretched, but the stretch in the 200-day and other SMAs, the 50, 100, it's all really up there, is the point. And so this is what they've done in terms of their deft engineering that I'm referring to that worked, where this is real. And you can see how dramatic, right, this gap is. Like, it took us from sort of working your way into like a stretched position, a fairly stretched position from these SMAs, where most of the dots were down in here, and now you're way up here. And this all happened in just a few sessions. So that has to do with, obviously, that news that they're making the absolute most out of. And you have to wonder, I think I looked at it, and I think that the SPY was up about 0.79%, I think, or the Qs, I forget which one it was, on Wednesday, when they put the gap stuff together for Apple and Google, and obviously two very large megas, right? And that leaves out Google, but you get the idea. And you could even see Apple, right, how they gapped that up. And that was sort of, here's where you were right on Tuesday, and then look how much higher you are, especially against some of the SMAs like the 150. You really took a big jump. So they were able to move those names and Goog, of course, up, and that really has made it possible to really save the situation, right? Because let's go over to a different chart. We need this one, and here's the Qs right now. And you can see how this, right, you are now still above the, you're still above the 20 SMA, the 10 SMA, the 15 SMA. But this is right. This is last week's breakout attempt here, right, where you start taking off to make a new recent high here, fade on Friday, new high, fade right back down on a Friday. Let's look at SPY, right? And it's a similar situation. New high last Friday, fade. I'm sorry, yeah. I'm sorry. New high last Thursday, new all-time high, fade on Friday, weakness into this week, and then they do the same thing again. But as of right now, we have to say that the channel we've been focusing on, which I'll try to enlarge right here, it lets me let me get rid of this drawing tool. I don't know why that's still left over. I thought I was on cursor. Maybe I clicked something. But you can see that we're still, I think, in this channel, but you still haven't really been able to get up to the halfway point. So I'm going to borrow this line because we don't really need it anymore. I'm going to put this at about the mid channel. And you'll see, right, that we didn't even really get to the mid part of this channel again. We really just keep falling just a little bit short of that, I think. And it's not like I'm suddenly all about the Andrews type concepts or things like that. It's just that something I like to keep an eye on. And really, there's two failures there. And I think that's a little tip off to what we saw Friday, and maybe the weakness we saw coming in on the first day of trading this week, which was Tuesday. And here you go again, where you start to maybe get a whiff of it, and then you're right back down. But look, here's the false break down, number one, and then here is false breakout, and that's what I'm referring to as your double whammy. So really deft engineering to really, right, feign the breakdown. When you see this candle reverse by day's end, you really don't know what's going to happen because you are below. You're right at really your former support line. You're right at the 20. Knowing what they do, right, you probably have the odds are they're going to find a way. But it was incredibly amazing timing if you're a bull that suddenly, right, Google is jamming and Apple is jamming up 3%. Google, I think, was up 6 or 7%. That really, and well, naturally, GOOG would follow as well. So, yeah, I mean, that's just impeccable timing. And these kinds of major moves, along with the Avgo move that has faded, but still, Avgo had just a remarkable move, and they just sold into it. They got that too to start pasting things up earlier today, but this is what they do. And some people get frustrated, and I understand why. But the bottom line is that this engineering, this is what we talk about a lot in terms of the plumbing, right? What's really going on and the squeezes that happen and how they're really socking it to someone that's on the wrong side of something if they can. I mean, that's just you could say, and I would agree, some of these reactions are just ridiculous and indicative of a market that's gotten too frothy. In many cases, you probably would be right, even if you wanted to start picking a fight with it. But I've seen it get so much more ridiculous across the board, where it's not just isolated cases. It's far too many to even count right quickly anyway. And you're like, okay, now it's really stupid. So that's probably when you got to wait for that if you want to fight against things, unless we get news and you want to react to that and get involved if the market starts careening lower. But at the end of this week, right, they survived really breaking down below this channel, and they did put a new all-time high together. So if you're weighing this, you could make that argument that we just did. No follow through, couldn't make it to the halfway point of the channel. This is weak behavior. On the other side of it, you could say that the leadership's gone, right? I mean, should say on the same side of it, you could say that the leadership's gone because NVIDIA is not looking like itself right now. The NVIDIA that we've all come to know and expect to be a powerhouse, that is not looking good. Let's get a year chart in here right now. So right that's talk about losing leadership, talk about right poor performance relative to what the Qs in the market have done. So there's a real dichotomy there between, say, the QQQ performance, SPY performance, and NVIDIA, and even SMH, which is, a really good barometer. They use the Avgo madness, and other stocks moved along with Avgo. I think at one point ASML was up pretty significantly too, and it still is. So they not that that's a I don't know what the weight is on that one, but I'm just saying there were other names that they were able to work some magic on. But yeah, I mean that is not looking as bad as NVIDIA, but NVIDIA worsening and taking a turn for the worse, that puts pressure on them to do things in other places. And like we said that I think that was a problem. I think we said that was a problem stock last week. We said that Microsoft could become a problem, I believe, as well. That it was looking a little shaky. I don't remember what, I think Meta, we might have even said the same thing, and they didn't. They were able to hold that clearly relative to the initial breakdown. Which again, let me do my typical reminder when it comes to breakouts and breakdowns, right? You can't think you're in the clear if it's going your way. You always have to be on guard until you really are beyond that by quite a bit, right? And then you're still managing, but just you can't get lulled into, okay, the breakdown's here and just I'm going to wait it out now, right? If they move things back by the end of the day, you've got to be making your adjustments, neutralizing risk, whatever the case may be. Same thing here, right? No follow through. But I'm getting back to the bottom line. They're still holding the trend. They are still holding the trend, and I think part of this, and I might be able to find this right here, is right here. I think it has to do with this. And this might be one thing that we didn't cover last week, or that we maybe didn't cover enough. But last week we were at 39.4 in terms of bearish sentiment, and here you have it at 43.4. So this has been hovering for far higher, as you can see, than the historical averages, far higher. And bullishness, as you can see, is typically averages about 37.5 in terms of sentiment, and that's been below there. So it's maybe a case. Now you could say, well, that doesn't mean it can't fall, and you're right, but it may be a case where the timing just isn't there, right? Because right there's just the contrarian part of it is missing, and that I wouldn't discount that too much. Where they're the masters of confounding, right? That's what they do. That's why we got the Bastages graphic from last week, because they are sneaky Bastages and they tend to confound the consensus a lot, right? So I would say maybe the consensus is what we're thinking. There should be some rough stuff coming up, and there seems like there was, and there seems like there's some issues out there, but right, they continue to find a way, and it might be egregious. You might say, yeah, they found a way, but that kind of jam job in Google and that jam job in Apple and that jam job in Avgo and so on, these are ridiculous outsized moves, and they can't keep doing that, especially if, right, things like Microsoft and NVIDIA are going to continue to work themselves lower. But they are the masters of rotation, right? So they'll take the money out of where they want to, the bigger dogs, and they'll move it into other names. And this has been, I think, the more of the modern game, where they find very deft ways of getting in and out relative to maybe the way it used to be done. And so there's less impact on their holdings and their longs, of which they have many. So just food for thought that way. So if you go back, let's get just into the pure charts, right? Let's just go back to SPY. And I think you have to say until the 20 is taken out, which is essentially our support line, that's where you start getting concerned and thinking maybe there's a breakdown and maybe retest or more on the way. Some people are going to note that volume really hasn't been anything special lately. So who's buying, right? If you kind of look at the volume profile, which is not as good as it used to be, unfortunately, but you might say, well, there was way more participation here, and lately there just hasn't been. It's kind of declining overall as we go higher. You might even say that the RSI, is declining overall. So you're getting compound negative divergence. So you could say all these things and you may be right, but remember, these guys are the masters of the false breakdown. Like they're great at doing this. And it's not, to me, like it's just not a surprise. If you look at the low today, and this is for all those I don't like the modern usage of this word. It's overused, but this is for all the haters out there, like the way that way my kids say it. But you could see that we really came, right to the support line that we had in there. Now, that support line's been there for a while now, and that is right at 643.33 on the low. The support line's right near there. It's only if you look at the 20-day up here in blue, right, when I'll mouse over it now so everyone can see it. That was right at 643. So they're very close. Very widely followed moving average, a support line that I would think most people can easily see at this point. And you find support there. They don't let it crack, right? And there's probably some options, expiration related stuff that had to do with maybe that a little bit. So I won't discount that, but it is what it is. And you're not really at this point on SPY, you're just not that overbought, because of what happened here. You really aren't that overbought. So if they want to go, you're going to use your breakout, right? You're going to use your taking out that high as your breakout level. Not that you can't trade it before, but that's when you're going to know it really should start to pick up if they move it up. And you're going to probably put a number near about 658, right, as the mid channel of where you think this thing can get to from where it is now. That's about 2% higher. Unless, of course, there's news, then you might expect it to burst through, and then we could talk about higher levels from there. But the 20 getting broken, I think your first level becomes the low there at 635. We'll round it off, and then your 50-day comes in at 633.14. Let's see what else we can come up with on the downside. That's just nuts and bolts charting, nothing super fancy here. We're not probably have to use yeah, I'd probably have to say that it looks to me like there's a little something down at probably going to have to go 626-ish after that. Probably 626 with a little bit of a hint of a flat line starting near there, 626. So let's do something similar in the Qs. They're not faring as well. You can see they did not make the new all-time high because the high is shown a while back. Let's make an adjustment on here. I meant on here. I meant on there. There it is. Let's try to get a channel going in here since it may matter. Looks like it could matter to me. We'll find out eventually. So I think that channel needs a slight adjustment, but I think that's a decent channel line right there. We'll put it right here. Yeah, I think that's pretty good right about there. And so it's interesting because that too is just really right above that channel. And the 20 and 10 and 15 are all there. So really, I think you probably know, like yesterday's low is where taking out Friday's low still leaves that nearby. That to me, with that kind of burst that it had, I want to see that gone, and that's really close to the close and open, really, which are very similar on Wednesday anyway. So you may as well use breakdown level of about 569, which is a full percent away. But clearly, right, breaking out above this high, you have to then start targeting the all-time high at 583. So that's only a few points above there. And then beyond, we would start talking beyond. But I don't want to get into that many levels on this video. I'm kind of veered off from that a little bit. If you need them, just let me know. I don't really read comments. As I think a lot of you know, I'm really pressed for time these days on the weekends. So boy, I'm just going strong, best I can. But anyway, this right here's the diamonds, and I don't want to neglect to point these things out, but it sort of gets redundant where you can see, right, that you see the loss of momentum. You don't see good stuff happening in RSI. Let's just go back to the Qs and make sure that it's the same, which that was my recollection, and it is. So you keep seeing these weaker and weaker moves, and that's why it doesn't. I think that's one reason why it doesn't feel that good out there, aside from the fact that we know that there are seasonality problems typically, and we also know that there's a lot of questions that underpin this market, not because it's up, but because of the valuations and so on and so forth. And if you juxtapose it against some of the economic data, which did look like it was getting better, and now really doesn't look all that stellar at the moment, I think Besant thinks that you're about a year plus out from that turning. So strongly. So I guess that's the theory at least. But yeah, it's not really, we're not really firing. It doesn't seem yet. Maybe that there's the stage is set. We'll see. Anyway, right. So you kind of have almost like a double top looking situation here that you couldn't really work up to mid channel in it as well, right here in the diamonds. So, which is very interesting to me. I'll tell you the reason why. That is because so many of the sectors have been doing okay, right? So a lot of these bigger sort of XLB, um, XLI, they were hanging in there pretty well. But yeah, we're not even working our way up, I think, to the midpoint. I'll just change that to you get that change just for everyone's viewing clarity. Let's do a quick different color on that just so you see that that's more of a mid channel. I could pull out the drawing tool, but I'm not going to go into that much time right here. So this is a kind of a widening channel anyway. But anyway, you get the idea that that is not all that, that is not all that impressive right now. So, is it the time of year? Is it just we're just not going to get that? We've got to work our way through some of this funkiness. But I mean, clearly, right? You can say, well, how bad is it? You just made a new all-time high. Not too bad. It's just that that's a really, once again, it's a really weak lack of follow through when you do it that you reverse probably most of the way down from the high, at least, well, I should say more than half of the way down from the high, it looks like. So again, you've got your SMAs. I don't really want to get into support on everything there, but your 20s at 451, you're at 446 on your 50, and breaking out, trying to work to mid channel, that would happen in the short run. That's going to put you at about 464. So that's about 2% away, I think, if you do move up and through today's high. But again, how you can be impressed by that is tough because, right, you usually want to see something really good. Like here you go with a new breakout. This is a strong finish, and you just stayed strong, and that's what we like to see. And we haven't really seen that many of those where we've really taken that next leap higher. And this is the interesting thing is that you kind of emerge from a consolidation. You've now busted through, pulled back, tried to go again, pulled back and touched here 2 days this week, held great, rising SMAs, great, right? Long terms are even upsloping. They're all trying to reorder and stack themselves. They're not quite there yet. But overall, there's a lot of good things there. I'm just looking at it saying it just doesn't feel as good as I think it should, all things considered. And then, of course, we have IWM, and that's everyone knows I'm not a table pounder that's been watching these videos for a long time. I do get excited, like anyone else, though, about certain charts at certain times. Probably some individual names have been really, really great. Some of them have completely fizzled, which is part of the game. But I think the bigger picture things we focused on when we got excited, mainly we got excited about the precious metals a few years ago. That's been a really good one. And I think we didn't pound the table, but I think a few months back we were talking about some of the mega caps like Google that have been left behind that finally started to find their stride. But IWM, probably the best looking, right, of all of them, because in terms of the way that it finished, it had a very strong finish. And you would think, okay, it's probably related to the yields falling, right? So let's just cover that because lower rates definitely help, and they help smaller companies that don't get prime, right? They help them for sure. They help consumers and all that type of stuff, as we all know, ultimately. But yeah, you could see this is really dipping. So is this sort of a flight to safety where bonds are being bought, yields are dropping, or is it reflective of the way things are going and the fact that obviously the Fed is set to lower rates? We're going to go into reduction cycle theoretically, and this is anticipated. This is on its way lower, and that's why there's the excitement building. I think there's a case for both of those things, actually. So who knows? I'm not sure what percent of one versus the other is impacting the yields right now, but that's what's happening. They are being impacted. And this is really close to, we're at the highest high we've been at all year long. And you can see that you're not too far off from that 245-ish level. And that's really the release point, I think. It's a very obvious release point, but here's your 245. Back here is really almost identical. It's slightly lower by pennies. You could say, well, inflation adjust that. You'd have a really good point if you said that. But I'm just saying, in terms of the actual number, it's the same thing. And you kind of have this very sort of cup and handle with this avant-garde style V or inverted head and shoulders kind of handle. So very powerful technical stuff that seems to be building up here. I'm not trying to take credit for this as I'm the only person out there looking at it. I'm just saying that this is probably about as close to table pounding as I get in terms of keep your eye on it. If we do get the bullish scenario, I think this is the one. I've said it for a while now, and sometimes it's done great, and sometimes it's stalled out near key levels we wanted to see it go through. It's been a little dramatic at times, melodramatic at times, but I do think the 245 will release this, and it really has, to me, it has a great deal of potential. I think you're looking at 20% from there that if we go into the next phase of the overall bull market, I think you're going to have a really strong performance whenever it does break out, hold, and go. So on that note, yeah, so I think right now, I mean, you're taking out today's high. That's going to be right near just below 240. And I think then, right, the way IWM moves, you've got to be looking at attacking that all-time high. And they can certainly do that in a couple of sessions, right? Falling, you may as well use the 10-day if you want to be aggressive. The 10-day right now is the white line. It's at 235. If you want to fight against this, or you've got a problem or news develops, and then you've got the 15 in red, the 20, the 50. I mean, that's really what I would use. Not to say that there aren't flats. I do think there's a flat probably near 227 when we look at the chart this way. So there's no question that's definitely got some flat characteristics, if you ask me. So you might want to add that one in between the 20 and 50. There's a decent gap between those two anyway, in blue and gold respectively. But I don't know. I mean, I think that would really be something that knocks everything off the rails, right? If that starts happening. But hey, it's not out of the question. I mean, down 5% in 1 week can happen, and so can up 5% in 1 week happen with this thing. It's a very good trader and typically has good, very good options. I like to use it as a focal name when I think it makes sense. On to the next, which is XAU. This is getting there, right, where I closed out a lot of things. I think it's getting overdone. I'm going to go to 2.5 standard deviations above the mean. You can see that I've got a 100 SMA spine or EMA spine. I forget which one this indicator uses, but you're even beyond that, right, on the upside. So you're probably at almost, let's see if it's 3 standard deviations stretch. Now you might say, well, I don't believe in Bollingers, and maybe you'd be right to say that, but I like to look at it just for context, appreciation of where we are. And you're kind of there at 2.8 standard deviations from the 100. So if we come over here onto this right here, you look at this on the 200. So this is in terms of percentile of how stretched you are. You're very stretched if we go back in time, right? You're at a percentile that's not on the stretch versus the 200s about 99.4%, it looks like. So that's really up there on this one relative to the other data we've got plotted here. So anyway, you get the idea. This is really, really stretched. I still like it. I do still have, of course, physical that I hold, and I've got some more speculative lower dollar names that I'm just in shares, but I got out of all my other call or bullish strategies that were options based for now. It wasn't like I saw some paper in here. I saw some in SILJ this week. I think that hit today. It's just very stretched. So I'm thinking that we're on the verge of some sort of a pullback here, and I'm trying to get a little slick here, and I might regret it. And I fully acknowledge that because that's why like this owning the physical saves me from that, right? But as a trade, I'm kind of thinking it's a little overdone in the short run, and that maybe we'll get a little bit of a pullback that we can then use to wait to see when things shape up again and then possibly get back in. But I haven't abandoned, the long side completely. I still have quite a bit of long side exposure because I'm really a long side player for the long run. And I think there's still more room for this to keep going. So I wanted to note that as well. Let's take a look at our market breadth at first, and you'll see why I'm not really trashing this market. Um, and just like we try to be objective about it. And realistically, this really wasn't that bad, right? It seems like, oh no, we almost broke down, and we didn't get this really great new all-time high. We kind of faded bad on some of these things, but there's the advanced decline cumulative average. It's just powering up. You could say, well, it's on the way to getting really overdone. You might be right. Can't say you're not, but I'm just saying, like, as of right now, not bad. This is a little bit of concern, I think, where some stocks definitely faltered and did not recover by week's end, because again, I think this is proof of the engineering where they use some really heavy weighted names to really jam them up dramatically, and that really masked what could have been more weakness. Just think about Google and Goog and as a name like Apple. And I think they had no choice with to do this kind of with NVIDIA breaking down. Remember, here's Apple on Tuesday, closes at 2:30, and then they move Apple up 4% by week's end in terms of the close. So that's a big boost, in the last three sessions for the market. But hey, this is the gang at their best, right? Doing what they do. They're the masters of the shell game. Um, Here you are with the cumulative volume index, which is now back on board and sort of fixing itself, right? And you can see that's pretty darn good there, right? So it's a little mixed when we look at this, little mixed with McClellan because you could see McClellan summation, the longer term kind of bigger picture, slower mover, that is not nearly recovered. So that's sort of showing you a little bit of what we've been saying, where the momentum just isn't there on some of these charts with worsening RSI type readings or from that indicator family. But it's also showing up in the market that way, where just advancers, decliners, up volume, down volume, all combined, not really rocking and rolling. But look at the new highs versus the new lows, right? The net is there, right, for today. So they did mark up a lot of things. You can see that. So I think you have to say that is not a disaster. I think that's overall. There's a couple little things you could have qualms about, but overall, it's just not that bad. So let's give them their due, and trade what's in front of us and be ready to go with a breakout or a breakdown. I definitely think the breakdown would, at this point, I think it's on the slide, but let's go over to sectors now. And again, if we look at sectors, I think I'm just going to boost things up a little bit so everyone can see them. But the XLC is the clear winner in terms of what they were able to pull off. And I don't think that's sustainable. So that's going to be a problem. So they're going to have to do something to start boosting something else up. But XLK, it would be the likely right candidate in terms of what you would look to, right? But right here, this is lagged, and you can see XLC went haywire to the upside, where again, on Tuesday's low, you're at let's call it around to 110. And then at Friday's high, you're at 115. So that's more than a 4% burst for the entire sector, right from the low to the high this week, which was that's obviously a big part of the move. The XLK lagging XLC now. We had a cooling off period where it started getting, we talked about a possible breakout in XLE. If it could hold above there, above these highs, it did not, right? That was about 89. They were not able to hold that 89 plus, brought it back in. So that's disappointing. XLF, new high. You could see that. Boom, what a reversal there. Okay, what a reversal there today. So that another thing we were getting hopeful about. Nope, not going just yet. Um, XLRE, they finished okay. XLV defensive, that finished better than it has in a few weeks. And you can see XLP stayed strong. They tried to really run and gun with XLY. Wasn't a disaster, but the breakout attempt is kind of clinging by a thread. So that's not a great look, right? It's vulnerable, in other words, to more pullback, and that would negate the breakout attempt, and that would maybe not be such a wonderful thing. Transports, nothing special to write home about. We're not able to break out this week. Completely understandable given that the market really wasn't on fire, but we have to watch this one closely because it's getting to the point where there's support triangular wise, right? And you've also kind of got this up here. So you're kind of setting up with this. Some might see other things in there, but you could call it an ascending triangle to a degree. You might even have people drawing a line here, whatever the case may be. But the bottom line is it looks like it's setting up to go. There's a lot of good things under the surface of the market that seem to be happening that are not, even though the indices aren't reflecting gangbuster performance. But there's also bubbling risks out there, percolating risk that we talked about that I'm just going to omit this week. But they're just out there, and that's the thing. We just don't know if they'll impact. And that's why I'm saying during a seasonal phase like we're in, where you typically don't see the best performance from stocks, maybe it's time to be smart. Maybe it's time to just be willing to not go for the gusto, leave all your money on the table at all times, long, play it smart, and then wait till this sorts out and you start, maybe the dust settles, you feel better about things. XLB worked back up after starting the week down. Same thing with XLI, but these are not breaking out yet. So a little bit, the Dow did perform. It hung in there, but it's not going yet. And you can see that former, world beater XLU has really continued to struggle. So that's continued to struggle. And I'm almost thinking like, is that indicative of risk on? Another thing, and that's not working, and the market's not going. If you note that the market just is not going, then if you also note that crypto, crypto has been threatening, it's been looking really good at times, like it's ready to go, and we see paper bubbling up, and it looks like it's ready. It looks like it's ready, and then we've been getting a lot of fizzle lately, right? Now, I would say that the fizzle was really started. Probably we had the one nice period where we got a good couple of pops and that faded quickly. So it's been disappointing. It seems like it's still there. I mean, you look at the long-term incoming uptrend, you look at this sort of intermediate term corrective action despite the new high. So you've been sliding now for, I guess, 2+ months at this point, slightly more, but you could really right the ship quickly if you could just get back above the 20 and 50. All you'll have then is just a little bit of, right, you're going to have flat line here and there, you're going to have flat line up here, then you're going to have the high. But in terms of Bitcoin, that could start to go. There has been some paper, but it's bullish, but it hasn't delivered, right? I've put these, I think Riot may have, but we had this in here. I'm not sure if this tried to trigger or not. I can't recall. Riot had a good little pop, but it stalled out this week, right? We had that last week. But yeah, they're just there, and we were ready for coin, and I really wanted some paper to come in for coin, but it didn't. I thought the coin setup here during the week, it was real close, has a lot of space between the 20 in blue and the 50 above. And we've seen this thing run many times. And as I say, incoming uptrend, short term, intermediate term has been a little weaker. But if you look at the sideways action now for a month plus, right, you're getting a little bit better readings because you're not dropping, right? So you're kind of theoretically wearing out players that are getting frustrated, and at some point you may be able to ascend. We have to wait for that. This is why we use trigger levels though, because we like to see things take out important levels and hold them. And this really hasn't happened lately. I had an MSTR idea in too, and that one I don't think triggered either. I can't remember. I just don't remember where I put the trigger on that one. But anyway, that was another one that, obviously that's related to the space, and it's not as nice looking of a charged coin, if you ask me, given how it's below all of its SMAs, for one. The other is that, it's made a new low, but that could be a clean out low. You still have the positive divergence happening there with a lower low, and you did have some paper. So maybe keep those on your radar, because those could be, if they do catch a bid there, that could go. And I would just point to the fact that the good thing here is that it's not overbought. I just don't think it's got that juice right now. It needs to get that juice back. Something has to drive that, and it just hasn't happened. But overall, I think that's the look, where the summary would be that, yeah, it's not that bad, in terms of your breadth and your sectors. Why, right? We're getting all this happening where everything's being bid, stocks, bonds, metals. That's I think, the big question that needs to be answered. I do think there's some things that have just been so left behind. So hopefully we'll see. I don't like to really focus on UOA that's related to country ETFs, but if there's liquidity in the options, I have no problem putting those in. And I think a lot of countries have been left behind by the U.S. market, and with the way we just continue to power up, and that would be interesting too. I'll have to look into that more if we do get good performance out of IWM and the stock market really starts to rock and roll again this fall positively, obviously. Then there could be some real laggards out there that we could keep an eye on and maybe talk about. So if you're in a webinar or you want to send me some names in our forum, we could try to maybe keep an eye on them if you think they're worth a look, and I'll do that. But I just came across a few this week, and I thought, oh, that's kind of interesting how these things have not moved. And if this does become the real thing, much like the AI discussion that we've had on a very elementary level, if it starts becoming more and more real, where it makes a difference in the bottom line, and in this case, if the market rally becomes more and more real and it starts pulling other countries along with it, they're so far behind, they could almost be much like an IWM, where you could get in right with a big potential move. But not only are you doing that, but you're getting in at a real discount. So the move could maybe even ultimately be dramatic. It could be dramatic, but we'd have to look at that. But I also did look at a few other things. Let me see if I can bring this one up. And so some things just are not, let me do copper future. I think I found something here earlier, where they're giving me these. Let me see if this carries to today or not. So it looks like it is. So this might be their continuous future. But yeah, copper, this, at least the representation I have here, this is one thing we would always take a look at when it came to the sector situation as a barometer, but this is just not there. It's just not it's not really what it was not too long ago. So I don't know the specifics of the copper market, obviously, right? It's its own thing. And I obviously barely have time for anything, let alone checking on that too. But yeah, I think, right, this is not really zooming right now. If this is representative here, and it seems to be the continuous one. So if on Thinkorswim, so that's not going. Oil just backed off, right? So that's not going. And we did look at lumber before, and that was lumber future. Let's see what comes up for us. They give me I think this is the one that gives me the spin. It gives me I think that gives me the spin. In other words, like Thinkorswim just goes into a loop. Let me see. see what it'll do. Well, I'll take a shot. I have a bad feeling. Okay, I may have gotten lucky there. So they've got this, yep, as of 9/5. So that honestly, it almost feels like we're looking at copper again. I guess I'm assuming this is accurate right now. No, I don't want to pull up like my other subscriptions and all that stuff. It'll take a while to do that. But assuming this is right, I mean, this is also not, and I did know that this market got smashed a while ago, so this may be accurate. But anyway, if it is, that's also not a great sign. We did actually have good bullish trades in UOA Pro related to this. Even this one was in here and related to this. So I guess the interest rates are right. The interest rates, and they're positioning in this thing, as we talked about, I think maybe last week, they're positioning here, I guess, on the interest rate assumptions, and they're going to worry about, they might even like cheap lumber, but I guess it's just sort of indicative that maybe the demand isn't there at the moment. So one of those types of deals where, yes, but it's going to take a while for that to catch up. But you can see big picture wise, this is working back up. So people might say, well, you got to be kidding me that housing, right, is where it is, and it's not far removed from the highs. We're only talking about 5% or so. And boy, that's crazy. Well, that's where we are. And it looks like it's not really that overdone or anything. So maybe a little bit in the short run here on a weekly chart, but it's not that overdone on a daily, all that. And I could see that trying to work its way up still. If the market takes that bullish, it's acting well now. So if it continues with that bullish behavior. So on that note, I'm going to wrap up, and I'm going to say that I hope that something that I've shared in this video helps you out this upcoming week or some week in the future. I do want to thank everyone for tuning in. Did not have the time that I did last week, so did the best I could to get something together, and hopefully will help out. Everyone have a great weekend, and we'll see you in the webinars and UOA Pro and all the other services next week. Have a safe and happy weekend. Thank you.